This segment is sponsored by the Mortgage Link and Eastern Title and Settlement. So what's the best way to navigate this real estate market? We get some answers from Mike Reibel of Realty Advantage. But first, Senior Loan Manager Mark Barron of the Mortgage Link has some information about the current mortgage rates. Mark and Mike, so great to have you here. Mark, I want to start with you. We're seeing these historical low rates. How long can this really last?
The question I'm asked so often is, why are the rates so low now? I can give you one reason. There's many, but here's one reason. The Federal Reserve lowers the rate so they can stimulate economy. They do this when there's uncertainty, when there's unemployment. Of course, you have the COVID. So rates come down, borrowers pay a lot less. So let me give you an example. With a loan amount of $300,000 at 5%, the payment is $1,610. Now today, I'm sure you could get in the higher 2%, so let's say 2.750. Your payment is $1,225. You know, that's a savings of over $18,000 over 10 years. So yes, it's a great time to go and either refinance or buy a house. Now, you might think, oh, rates are going to change. What we're seeing now is COVID is in the rearview mirror. We have a president that's a little bit more predictable, and the workforce is starting to come back. So these may affect it, but really don't panic. They're going to stay here for a while. So go out, refinance, or buy a home.
And Mike, what is the market looking like now that COVID is kind of easing up a little bit? And do you have any tips for our viewers of how to navigate this market?
I do. Thanks. Good morning, and appreciate you having us. I've been a real estate broker and a branch manager for 25 years now. And in my career, this is by far the lowest flat homes for sale that I've seen. As COVID conditions improve, we're really hoping that sellers get more comfortable with buyers being in their homes, and we're hoping to see some additional inventory in the coming months. So one thing that we're coaching buyers is there's really about 4 tips, I would say, to really help your chances out there. There's a lot of multiple offers, there's bidding wars. The first tip you can do is get pre-approved for your loan. And it's important to understand the difference between getting pre-qualified and being pre-approved. And that's something that Mark can certainly help you out with. You want to make sure upfront you're giving your lender your tax returns, bank statements, anything else they need to get your loan fully packaged and ready. So the only thing you need is your appraisal. The second tip I would say is watch your price range. A lot of buyers these days, I understand that prices have really surged. They're shopping for homes at the maximum that they're approved for. The problem is that a lot of homes these days have multiple offers and they're selling for more than asking. So you don't want to get in a situation where you really don't have any room to negotiate. Third tip I would say is consider a pre-inspection. With multiple offers, there's a lot of pressure for buyers to waive inspections. We typically do not advise that. I'm happy to discuss that in detail, certain things you can do, but having an inspector with you before you make your offer is definitely wise, so you get yourself covered. Last thing I would say is leverage your lender, and this is where Mark can be really valuable. Make sure you authorize your loan officer to actually talk with sellers' agents. So that way when you have an offer and if that agent calls and wants to take a deeper dive and find more about your finances, Mark can explain that in detail. That can be the difference in you getting your dream home or not, especially in today's market.
Some incredible things to think about for sure with as competitive as it is. Mark, is it a great time? It is a great time really to use those low rates. What is the next step for somebody that's looking for that home or refinancing that home loan?
Let me give you some tips. A minimum credit score of 650 is suggested. Now, how do we figure out the income? How do you qualify? It's very simple. We use something called a debt to income ratio. We take all your liabilities, that's on your credit report, plus we take your new mortgage payment and divide that by your income. For instance, let's say you have $2,000 a month of payments. Well, on the other hand, you bring in $6,000. So we divide the two and you get 33%. that is well within the range.
Awesome, guys. Well, we appreciate you updating us on the market, letting us give you some things to think about and some incredible tips. We appreciate you guys being here.
Thank you so much for having us. Appreciate it.
Certainly.
And for even more information, call 833-MTG-LINK and be sure to follow the real estate top performers on YouTube.